and you're watching CNBC TV 18.
Hello and welcome to Prime Property, your weekly real estate reckoner. Here's a look at what made news in the week gone by. RBI's 25 basis points repo and CRR cut fails to cheer the real estate sector. Developers dash hopes of a cut in property prices. DLF finally gets rid of its wind business. The stock sees action as the company gears up to raise a whopping $1 billion over the next 2 years. The Realty index was up 1.3% this week. The biggest gainer, Passive-Nath, up 9.8%. The biggest loser, HDIL, down nearly 6%. Real estate giant DLF was in the news this week after selling off ultra-luxury chain Aman Resorts and a prime 18-acre land parcel in Mumbai for a combined 4,400 crore rupees. Last year, it divested part of its wind business for 282 crore rupees on January 31st. Bharat Light and Power, promoted by the former head of GE India, TP Chopra, was the buyer. The second leg of this transaction is likely to be concluded for 800 crore rupees, which will help DLF meet its guidance of raising 5,500 crore rupees from the sale of non-core assets. DLF may also look at a mega fundraising plan of $1 billion spread over 2 years. Phase 1 will see a fresh equity issue for institutional investors, or IPP as is popularly called. That will be for around 2,500 crore rupees. The promoters won't sell shares, but the company's fresh share equity will help it meet the SEBI guideline of a minimum 25% public shareholding norm.
We've begun the internal brainstorming and the planning process for that. We do need to abide by the SEBI deadlines of June. You're right. So sometime I'd say it will obviously take us a few weeks to be able to prepare ourselves. But clearly, sometime clearly by the end of May, we should be hopefully able to take the necessary capital action to meet the SEBI deadlines.
Now, a second round of dilution will be necessary when promoters convert the compulsory convertible preference shares in DLF subsidiary DLF Cyber City Developers, the deadline for which is March 2015. This could help DLF raise another $500 million approximately.
I think that is speculative right now, because the promoters, if I recall, have a time till March 2015 to sort of convert those CCPSs, and then what the future direction of that conversion will be, we'll have to decide. So I think we have time at least till March 2015 to sort of plan out the exact blueprint around that with the promoters. Right now, any comment on that would be speculative.
While fundraising is on the anvil, a correction in property prices is unlikely. DLF believes the 25 basis point cuts in Repo and CRR are too small and will not lower EMIs or help in picking up demand. So the RBI action will have no impact. But what's DLF's overall outlook for property prices in 2013?
One expects that the growth in pricing will be far more moderate going forward. But I've always maintained that irrespective of what the pundits say, there is no big time correction that is out in the offing. That at least one doesn't see it, because the pace of approvals is choking up the supply in many key pockets. B, the prices of inputs are continuing to go up. So, I think there's very limited leeway in terms of a significant price correction. But yes, clearly, in select pockets, it could be there. And the pace of price increase would clearly, I think, continue to be moderate.
Spoken like a developer, no price correction, only price appreciation.
I see no reason why you will not continue to see price appreciation. The pace of price appreciation may vary, but on a medium-term basis, there will be appreciation. One is seeing a price appreciation in the resale of properties across NCR. Even in terms of fresh launches, if you see something like the Sky Court that we launched in December, it was priced, I don't know, I'd say maybe 2.5 times what prices in the adjoining areas were 3 to 4 years back. So clearly there has been sustainable price appreciation in some of those pockets.
So going by what DLF is saying, there's no point in you actually holding out and waiting to buy a property. But should you wait for cheaper home loans?
Look, from a consumer standpoint, I'd say that if you need a house, you should buy the right apartment based on your budget and your aspiration. The home loan rates is, all home loans are a 15 to 20 year cycle. In a 15 to 20 year cycle, interest rates will go up, will come down. Clearly in the medium term, they seem to be headed southward, so this is a good time to enter the property market. But really, across a 15 to 20 year period, you don't time your entry whether the interest rate was 25 basis points up or 25 basis points down.
So while developers are not optimistic of banks bringing down rates too much, bankers themselves are holding out for hope of a reduction. Now let's tell you what's trending on our pricer meter. This week we go commercial and bring you up to speed on rentals pan-India. The National Capital Region, including Gurgaon and Noida, will enjoy higher rentals, says Cushman & Wakefield, but Noida continues to lose out to Gurgaon and the perception overhang has weighed down on rentals.
Noida certainly is at the bottom. Definitely one should invest in Noida.
Meanwhile, in the east is going slow for Kolkata as rentals head south due to poor demand and more supply.
Kolkata as a market, although fundamentals are strong, but because of high vacancy and limited demand from IT sector, remains less attractive.
But in the south, Hyderabad is expected to see an uptick in leasing activity and rentals may remain stable.
I think Hyderabad market provides huge upside for investors. 10% vacancy is certainly not significant, and given the demand fundamentals and infrastructure, is definitely attractive market.
In neighboring Bangalore, rentals seen moving higher as the overall vacancy rate declines.
In Bangalore, given these strategic locations such as Outer Ring Road and Manata, where the rentals have already appreciated, one would expect higher appreciation given the overall demand in that city, and therefore one should definitely invest in Bangalore.
While Bangalore and Hyderabad are good bets, Ahmedabad may not be a wise investment idea at this point. Rentals continue to be under pressure and may further decline as 766,000 square feet will be added to the already vacant office space.
So Ahmedabad market has a very limited demand. Obviously there's a very limited IT activity and therefore too much of office space supply, and therefore that has kind of impacted the rentals and likely to remain soft.
But the commercial capital will see rents staying largely stable at current levels, but the Bandra Kurla complex is expected to buck the trend and register higher rentals.
I think rentals are already bottomed out in BKC. We expect next 12 to 15 months the rentals are likely to go up by at least 10 to 15%, if not more.
So rentals reflect the current state of the economy, mostly stable but with pockets of interest. So should you put your money in a commercial property or a residential property? Let's ask our experts.
If the investor is looking for income, commercial real estate is recommended because your yields are 8% to 12%. While if you want capital appreciation and want to multiply your wealth, then of course residential probably gives you a higher upside.
You can get much better rental in a commercial office space. So if that is the need that the investor has, then invest into an office space. Because the yields for office space are between 9 and 10%. Whereas the yields for residences, if you let them out, is more like 3%.
Hope that's a useful tip for you guys. Time now to find out what's buzzing on Deal Street. JP Morgan invests 375 crores in Purvankara's residential project, Purva Windermere in Chennai. This premium housing project is spread over 55 acres. Nitesh Estates and private equity player Xander are in the race to acquire Goldman Sachs' 73% stake in the upcoming Four Seasons Hotel in Bangalore. Air India has leased 4 floors of 54,000 square feet of office space in its iconic building at Nariman Point to SBI. Air India has got a rent of 350 rupees a square foot a month, and that's much higher than the 200 to 250 rupees a square foot expected by analysts. Air India may take out another tender to lease an additional 35,000 square feet at that flagship building. GOL Offshore may put 3 apartments in South Mumbai on the block to raise 60 crore rupees. This includes a duplex 4-bedroom house in the prime Mahalakshmi area. The proceeds may be used to fund redemption of 200 crore rupees of FCCBs due in April 2013. Last month, the company did sell apartments in Malabar Hills for around 29 crore rupees. On Launchpad this week, we head down south to Hyderabad's Banjara Hills, where the Brigade Group has launched a luxury residential project, Brigade at number 7. With only 55 units, you have the option of picking up either a 3 BHK or a 4 BHK apartment per floor, but only if you're willing to spend big bucks. With a starting price of 3.6 crore rupees for a whopping 10,740 rupees a square foot, this Brigade project is nearly 40 to 60% higher than the market rate, which is 6,550 rupees to 7,550 rupees a square foot.
Well, there are 55 units here proposed in this project, and during pre-launch and immediately after launch we got a very good response, and we've already sold almost 20% of the units.
Clearly, Brigade's strategy here is high margin and low volume. But on that note, we'll slip into a short break. Coming up, the world's tallest residential tower and the man building it, Abhishek Lodha.